Understanding compounding is why you should be cautious about the overvalued market. Investing is great when everything is going up and the emotions tell you to stay the course because that will continue to happen. For 2 years now, the S&P 500 has posted really strong gains because of a heavy concentration in the Mag 7. There are now investors who say the market could be up another 20% in 2025. In our portfolio, we will continue to remain cautious next year as we understand that compounding can work for you, but also against you as well. What do we mean by that? Let's say that for the 3 years the S&P 500 is up 20% per year. Your $100,000 investment would grow to $172,800 because of compounding. You probably feel pretty good about that and think it will continue to increase. While this is possible, it's like riding a roller coaster. What I mean by that is if you're riding a roller coaster, you know as it gets closer to the top, the very top, it slows down and it feels like it's almost going to stop. Then you go over that peak and you hit that big decline. That happened in 1935 and 1936 as big gains were followed by a 39% decline in 1937. I do not want to use 2002 when the S&P 500 had lost almost 50% of its value. I thought I would use something else from history that was not the worst case scenario. Back to the 3 years of 20% gains and a portfolio value of $172,800. If we saw a 39% loss again like 1937, your account value will drop all the way down to $108,864. You might be questioning, well, how can that be? It's because as your account grew in value, the percent decline is now on a bigger amount than the initial $100,000 you started with. So in other words, after 4 years of investing, your $100,000 investment was only up 8.9%. This is why for long-term investors, I can continue to stay the course on a more conservative investment style and not try to figure out what the top is for many of these expensive companies. The other problem as well is once people lost 37% of the money on their investment, they would probably leave the stock market for years, missing future gains. I can tell you, many people think they know where the top is and they'll get out right in time, but unfortunately, many people stay at the party too long. I can tell you, managing money through the tech boom and bust, many people thought the party would continue in the early 2000s, and then they did not foresee the major declines that we saw during the tech bust. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.